Welcome back. Let's get to the commodities market. Now we have Dr. Adesola Sumoni, analyst, financial derivatives company, joining us now to bring us up to speed. Great to have you on the show.
Thank you for having me, Ladi.
Yeah, so now we have certainty. Great news there coming from Russia and Ukraine. Russia back in the deal, and we see wheat dropping.
Yes, indeed. I mean, we had this conversation on Tuesday, Ladi, and I told you that we expect that, Russia is going to come out with a statement this week. And quite surprisingly, they came out quicker than everyone expected. I think some analysts have said that Ukraine kind of called Russia's bluff because despite Russia pulling out of the deal over the weekend, on Monday, Ukraine still exported around 350,000 tons of grains and nothing happened, So I think some people believe that, Ukraine called Russia's bluff, but underlying all of this, I think Turkey had a discussion with Ukraine about how the implications of Russia suspending the deal on a lot of low and middle income countries. And thankfully, as soon as Russia announced that they would rejoin the deal, we saw prices of many commodities decline, almost erasing the sharp increases we saw earlier in the week. So that's positive.
Yeah, and it looks like, at the end of the day, geopolitics is still what's pushing, that market at this time. But what are your expectations going forward? Are they still going to renew, the deal come, I think, later on in November?
19.
Yeah.
Yeah, I think I'm a little bit bullish on this. So I expect that we'll see a renewal of the deal come November 19, which is the expected expiration date of this current deal. But I think that first of all, it's positive that Russia came back to the table quite quickly because it could have been messy, if Ukraine continued to export grains out of the Black Sea region without Russia's support. But I'm glad that happened. But on the other hand, we're also seeing some dryness in major wheat growing regions in the United States, which could affect the supply of wheat globally, and that could push prices up. But generally, I think this I expect I'm bullish about the agreements with Russia between Russia and Ukraine, and I expect that should support prices in the near to medium term.
What do you see coming next for grain traders? Do you think they're still going to be, trading all of this geopolitics right now, or are they going to just, buy and hold, some of these commodities?
I think at this moment, everyone is just maintaining tentative positions because the market is generally at this moment driven by, technical factors. Tomorrow, Russia could come again and say, Ukraine did XYZ, and that could push prices upwards at this time. So I think people are just taking short positions at the moment, traders at least.
Yeah, short positions. That's what most traders like, at this time with all of this uncertainty. Let's look at the oil market now. We're seeing the prices are going up again, inching up, but it seems like it's the same old play we've been seeing.
Indeed, Ladi, at this moment, commodities are very, very volatile, and like I mentioned, for grains, investors also traders are also taking short positions on oil. Yesterday, we saw oil trending. At this moment also, I think what we are seeing is technical factors are riding over fundamental factors. For example, data from EIA, the Energy Information Administration, showed that U.S. crude stockpiles declined sharply last week by around 3.1 million barrels, which should signal some strong demand for oil, and that should push prices upwards. However, news coming in later yesterday and today from weak economic data from China, as well as the stronger dollar from the US overpowered that or outweighed that, and that's why this morning we are seeing the prices of oil trend downwards this morning. So we're seeing technical factors outweigh fundamental factors at this moment, and that just shows that traders are going really, really short, and because of also all the uncertainty around geopolitics and the tightening cycle we see at the moment.
All right, and what do you see coming for oil prices next week?
I think at the moment, oil prices are the biggest factor weighing on oil prices at the moment is the stronger dollar. Like you mentioned, the U.S. has increased their benchmark interest rates, and that has made the dollar stronger. And when the dollar strengthens against the basket of currencies, we find that oil becomes because oil is denominated in US dollars, it becomes more expensive to holders of other currencies. So that's the factor driving oil prices at the moment. But I think oil prices will trade in a tight range in the near to medium term.
Right, and let's look at you did mention the rate hike yesterday. That was expected, 75 basis points to happen. But any key takeaways from Jerome Powell's comment?
I think markets were very confused by the comments yesterday. Like we didn't know what direction was going. But I think at the end, Jerome Powell struck a hawkish note, which is signal that first of all, we don't know where the end of this tightening cycle will be, and that's a big source of uncertainty to the markets, because then you cannot plan. And we're also expecting more and more increases in benchmark interest rates, albeit smaller increases in benchmark interest rates, but we are expecting more and more increases in benchmark interest rates going forward. And this has, I think, a lot of implications, not only for the US, also in England today. We expect also an increase in benchmark interest rate by around, I think, 50 basis points. The ECB last week, also the European Central Bank last week, also increased benchmark interest rates. So I think with this tightening cycle, we are seeing one with the statement from Jerome Powell yesterday. We don't know when it's going to end, right? Because inflation has remained stubbornly high in the US. Inflation is still 8.2%, which is a 40-year high, and it is significantly higher than the long-term inflation target of 2%. So I think the biggest implication for this, at least for emerging market economies, is in terms of their currency. So with the strengthening US dollar and the weakening currency of many of these emerging market countries, I think, first of all, importing is going to be more expensive. But the weakening of the currency for these countries also has many implications. We're also going to see, capital flight. You mentioned a risk of sentiment in the global stock market and global commodities markets. So we're going to see like an outflow of capital flight, essentially, from emerging market economies towards the United States. So I think that's one of the biggest implications for emerging market economy.
And we saw, the U.S. markets were happy, before the comments came from Jerome Powell. And I know a reporter asked him about how he feels about the market actually rallying after they raised by 75 basis points, and immediately he became hawkish. So I'm wondering, do you see some kind of, pivot, coming, even though he's still quite hawkish at this point?
I think, this is what was happening yesterday, right? Markets were a little bit confused. Initially, it seemed dovish, and towards the end, it then seemed hawkish. So I think it's a little bit difficult to say. There's a lot of uncertainty. Even Jerome Powell himself, he says, when this tightening cycle will end, we don't know. But what he mentioned is they are willing to go as long as it takes. They are willing to risk tightening too much compared to tightening too little. So I think we can expect more tightening going forward, albeit maybe at a slower pace and at smaller increments, but we can expect more tightening going forward.
Now, we're seeing the dollar index, the DXY, that's, trended downward, for a while now. But now we have the 75 basis points, and we still have, hawkish sentiment going forward. Do you see the dollar index starting another run coming soon?
Yes, indeed, definitely. I see the dollar strengthening against the US dollar. I see the dollar strengthening against a basket of currencies. If you have a look at the chart now, you see it strengthening against a basket of currencies, and I think that has many implications for commodities, even for the United States exports, right? Because the exports from the US now will become more expensive to holders of these other currencies. So I think, yes, definitely the US dollar is going to strengthen because of the risk of sentiment. Investors are going to move towards safer assets, of which the US dollar is one of them.
Right, safe. All right, but still talking about currencies now, where it's back here, where we see the pressure on the Naira right now. It's we're getting different reports, for what's happening in the parallel market. How are you seeing it?
Man, so it's interesting, but I think at this moment one of the biggest factors driving the depreciation of the naira against the US dollar is this redesigning a business, and I think particularly because Nigeria is such an informal economy, around, I don't remember the exact percentage, but a huge percentage of the currency in circulation is outside of the banks, and as a result, monetary policy tools are kind of ineffective, or they don't have the expected effects on monetary variables. So with the redesigning and with the deadline so short, I think the deadline is, I'm not sure whether it's December 15 or January 31st, or one of the two, but the deadline is quite close. Right, and because first of all, there's elections, so a lot of politicians have, cash outside, for stomach infrastructure and whatnot. So we are seeing a huge rush to dump those huge sums of money, and that is part of why we are seeing the dollar depreciate. We are seeing the naira depreciate so sharply against the basket of currencies. And also, if you look at even at the official markets yesterday, the naira also depreciated quite significantly, and the gap between the official rates and the parallel rates is around 88%, which is, since I've been an analyst, this is the lowest, and I think it's also the record low we've seen. First of all, the gap, but also the rate at the parallel market. But again, I always like to end on a good note. For Nigerians in diaspora, this is a good opportunity to send money back home, to maybe buy some properties, or because now you get more bang for your buck. If I send £1,000 home now, that's almost £1 million naira. So that is, I think, positive. That's the positive part of this. That's positive part.
And I imagine the negativity for wages right now, talking about workers, it's definitely not positive for workers at this point.
No, definitely. I think at this point it's quite sad, because as the currency is weakening, the purchasing power also of workers is weakening, and I think people they get less bang for their buck. We're also seeing inflation trending upwards, so you can buy less and less with your salary. So I think that is a really negative part, and also the fact that the currency is quite weak at the moment, and I think is likely to get weaker. I think it's going to also discourage a lot of traveling, a lot of importing, a lot of businesses. So I think that's also the negative part, and it's quite significant.
Yeah, and also, talking about the naira now, we've had, projections for that 1,000 naira level, and obviously it's a scary level. What do you see happening if that actually happened?
That's I think it's I would say that it's psychological resistance point. So I think people are betting against the naira. Let us put it that way.
Oh yeah.
So a lot of investors are betting against the naira. I hope not, because that would be really bad, I think. So let's hope not. This is a psychological resistance level, and I hope it doesn't get to that.
It doesn't happen. We don't want to see that happen. What's happening with cocoa?
Oh, the prices of cocoa are trending upwards. I think we are seeing in many West African growing regions. Again, it's quite important, West African growing regions, because they account for more than 50, I think around 45% of total cocoa exports. And so we are seeing excessive rainfall and excessive soil moisture, which is kind of breeding these black pod diseases, and it is kind of weakening. The harvest from many West African grain regions, particularly Ivory Coast and Nigeria. And this is kind of creating a shortage of cocoa in the global commodities market, and that is why we are seeing prices trending upwards at this time.
And I'm sure last time we talked about the domestic commodities market. How's it looking today?
Indeed, the same factors are driving the domestic commodities market like that, and I think it's quite bad for people in Nigeria, because we are seeing eroding of their incomes. We are not seeing wages increase, or the pace of increase in wages is very, very slow, or is very, very small compared to the increases in domestic commodities prices. We are seeing, for instance, the flood is really that is wiping a lot of harvest off the market. So we are seeing kind of shortage of many domestic commodities markets. If you look at our slide, you see prices trending upward. In addition to that, we are seeing, because of the weaker currency, we are seeing imported inflation, and some of these commodities, the prices of these commodities are increasing quite sharply. Like I mentioned on Tuesday, a bag of rice now costs 45,000 naira, which is up around 40%, and I think that's quite significant. Even a 50 kg bag of gari now costs 23,000 naira, which is up 77%. So I think at this time, it is. I think the government should consider some relief packages or some form of safety net for the most vulnerable portion of the population, because these sharp price increases have very, very important implications for farming, starvation, food insecurity, malnutrition, and things like that.
Exactly. Well, Desola, well, I know you're in the UK, and I have hope you're going to be sending down some pounds so I can, make do with what I have here.
Indeed. Indeed.
All right, Desola, Dr. Desola Sumoni, analyst, financial derivatives company. Thank you so much.
Thank you for having me.
All right, now we're talking about the banking sector right after this break. Just stay with us.